Joining me now is Jeffrey Roach. He is the chief economist at LPL Financial. Jeffrey, welcome.
Well, good morning, Ashley. Thanks for having me.
All right, so we are about 30 minutes away from the start of trading. What are you going to be following most closely today in the session?
Well, as you mentioned just in your opening comments, there has been a little bit of uncertainty, volatility, a lot of change in directions in where the Fed is going, where Fed expectations are going. You know, one of the things that I think Bernanke coined a nice term about this, open mouth operations. I think it's a great tagline to say, okay, we know these Fed officials are trying to communicate and really kind of open up the market's understandings between the two dynamics, between inflation, unemployment. At this point, as of just really 30 minutes ago, we saw an important member of the FOMC suggesting that unemployment, labor market problems, and cracks in the labor market are more important than inflation pressures right now in the market.
All right, so you're, of course, talking about, John Williams came out and pointed, there may be another rate cut now. About 70% of traders are pricing that in. What are your thoughts on that?
Well, I think it's still a little bit up in the air in terms of December. I think it's helpful to remind listeners that the more important thing is to understand about where they're going to act in 2026. Longer term view, is this a consistent rate cutting campaign? Or is this maybe a one-off insurance cut? My belief is when I look at the data, both labor market data, job data, how businesses are reacting to the challenges, I think this is going to turn into a consistent rate cutting campaign. And by the end of next year, 2026, I think Fed funds rate will be approaching 3%.
All right, and the September jobs report, it came in higher than expected with 119,000 jobs added. The BLS confirmed there will be no October report. How are you evaluating the state of the economy based on this data point?
Right, so a little bit of a hot report when you look at that latest number, but I think what's really important, helpful for investors to remember, the revisions are still pretty aggressive. So you think about how June, July, those were big downward revisions. So I look at the 3-month moving average of jobs numbers, not just the month-on-month changes, because those numbers do get revised as more and more data comes in. And that's very, very important. I think those downward revisions, suggest that the labor market is weakening. It's not necessarily collapsing, but weakening.
All right, and I know we touched on what you might see in 2026 from the Fed. Are you expecting more rate cuts in 2026?
So whether they cut or not in December, I think we do have 2026 set up for at least 3 cuts. So when you think about growth, we've had pretty strong growth in 2025, hence that's why it's been a challenge. Inflation's still running hot, but the labor market's weakening. I think 2026 is going to provide a little bit of a clearer picture. We do think GDP growth in Q1 of 2026 is going to be the lowest. Perhaps there's going to be a little bit of a tailwind the latter half of 2026 for growth. I think as a year progresses, you're putting a little bit above 2% growth in GDP, but you're going to see inflation pull back. That's going to provide a perfect scenario for the Fed to cut several times throughout the year next year.
All right, and the AI sector was under pressure yesterday, headlined, of course, by NVIDIA. Can you take us through how investors are evaluating that space?
Well, it's important for your listeners to remember there's Wall Street and there's Main Street. When the conversation's about an AI bubble, maybe that might be focused on the valuation side. But when you look at Main Street and you look at adoption rates, utilization rates for AI, it's still very, very low, particularly in some of these labor-intensive sectors. Think about hotels, think about healthcare services. When you look at AI adoption rates, still very low. I think when you think about AI, it's the beginning. We're in the very early innings of this game, and I think there's a lot more room to go in terms of CapEx spending, in terms of adoption rates, in terms of actual spending on AI subscriptions, platforms, tools. I think we're early innings here.
All right, and where do you see growth prospects in the market in 2026?
Well, I think going into next year, it's going to have a little bit of pressure at the first half just because valuations are hot relative to where the economy is growing. I think, though, when you think about global opportunities, I think investors should consider some of the international exposures for 2026. When you think about growth in the U.S. slowing first half, dollar weakening, perhaps that's a fairly decent setup for international exposure in portfolios. We're going to actually release, the LPL research team will release our annual outlook in early December, and we're going to kind of walk through that in greater detail.
All right, Jeffrey Broach, Chief Economist at LPL Financial, thank you so much for joining us at the New York Stock Exchange.
Thank you so much.
All right.